Okay, good morning, guys. I want us to have a look at a very simple strategy. This strategy takes out a lot of thinking, so it is something that you can use and really get going very quickly. Now, it's that simple. Go to your 4-hour chart. This is my 4-hour chart, and I'm on Bitcoin. So the first thing you do is that you have to locate an area where the market has moved swiftly away from. For instance, when we look here, we can see that the market came here and paused a bit and moved to the top, and they are normally characterized by big candles. So over here we had a pause here, and the big candle shows that there was a swift movement from this level. So when you get such a level, what you do is that you would draw your line. So it's just about drawing a line like this one. So it becomes our point of reference. So that's the first thing we have to learn to do. Note your point of reference. It's just a simple line, and we have an example here. Now with this line here, what you're going to do is that you will switch to the lower time frame. It can be a 1 hour or your 15 minute, and in this case we switch to 1 hour. The thing is that whenever the market comes here, we will look for a demand. A demand is like a candle which looks like this. It is the down candle before an upward movement, and it is the up candle before a downward movement. So we will note our demand, and the rule is that the demand is created below this line, and so it's like when we are trading above it, the demand is below, and at the same time when we are trading below it, the supply is above it. So we will come here and draw our demand, which is this one. Now when the market trades and gets to this level, we will look for a reversal pattern or a candlestick indication and open the trade. So here, if the market came here and formed an engulfing, or we could see that there were rejections over here, and that could be our signal to make an entry. Or we could switch to the 15 minute. You could switch to the 15 minute and look for a kind of a breakout and open a trade from there. Or some people can use the head and shoulders, the top or bottoms, and all those things as an indication to enter a trade. So the strategy is very simple. It's very simple. Let me show another example. Over here, you can see that the market paused here and moved swiftly down. Now there's a big candle here indicating that there is a swift movement, a very quick movement from here. So we draw our point of reference. Now let me just copy this one. So we draw our point of reference over there. So since the market is trading below it, we will have a resistance. We will go to the lower time frame and look for a supply, an upward candle before the sell. So here we can use this candle, or even this one. So we draw this. Alright, now you see this candle rejection. Yeah, this candle rejection could be an indicator that we should go. You could use this one as your trigger. The moment you see rejections, you can open a trade, and there you go. So we came and traded below it. Consider the market came below our reference point, and in that case we will look for another resistance, which is this candle, the red one here, and you draw it well. So when the market comes to it and rejects, there we go, we can open another trade. It's that simple. Just have your point of reference down, and there you go. Now there's another example here. I see that here we had this big candle and there's a pause, so indicating that this is an area of reference, a point of reference. So we go down to our next time frame and we look for a supply. This was an upward candle before we sell, so we come to it, we draw our supply level. Now when the market comes to it and we see rejections, or you can go to the lower time frame and look for other patterns to make your entry. So it's that simple. Now the market came to it, rejected, it even traded below the line. That was a very good point to make an entry. We have another example here. It's that simple. Over here you can see that the market paused here and moved swiftly, so we drew a point of reference over there. And then what next? We went down to the lower time frame. Don't think too much. We went down to the lower time frame, and here you see that there's this swift movement here. We had this red candle before the buy, so we drew this over there. Now the market came to it and you could take a short trade over here, but this demand was broken after this swift movement through it. So if the market will break a level, or if it will break a point of reference, it will move strongly through it. Then since we are now trading below our point of reference, we had this supply, which is this candle over here, and we traded there, rejected, and there we go. So it's that simple. Or you can decide to take your entries on the 15-minute. You can decide to take your trades on the 15-minute. Identify your point of reference, which in this case is going to be something like this. You can also use that as your entry time frame. So whenever the market comes there and rejects, you can start trading. Alright, so it is that simple. It's that simple. Alright, thanks for watching. See you again.